Hey everyone, welcome back to Corporate Decoder, the place where we decode the hidden messages in corporate filings so you don't have to. And today we're looking at Phoenix Motor Inc. and a report that suggests they might be gearing up for a pretty big change. Let's dive in before we get into the nitty-gritty if you are new here. Make sure you hit that subscribe button. We break down these complex financial documents into plain English so you can understand what is really going on. Also, join our Discord community linked in the description below for more exclusive insights and discussions. Alright, so we've got a Form 8K from Phoenix Motor Incorporated. Think of this as a current report filed when something significant happens that the company needs to tell its investors about right away. This particular report covers a shareholder meeting that took place on the 23rd of December 2025, and what came out of it. The big news here is that Phoenix Motor Inc. held its annual meeting, and shareholders voted on several key proposals. The company is clearly trying to make some moves, and the shareholders weighed in. We're going to focus on what these votes mean for the company's future. First up, we have the election of directors. This is pretty standard. Shareholders are asked to vote on who will sit on the board and guide the company. In this case, all 5 nominees proposed by the company were elected. The numbers show a strong majority in favor of each nominee, for example. Xiaofeng Denton Peng received 7.4 million votes in favor, with about 1.3 million withheld. This indicates that the current leadership is supported by the shareholders. Next, the shareholders voted on ratifying the appointment of their auditors. This means approving the accounting firm that will check the company's financial books. Summit Group CPAs were approved to serve as the company's independent registered public accounting firm for the fiscal year ending the 31st of December 2025. The vote here was overwhelmingly in favor with 9.4 million for votes, indicating trust in the chosen auditors. Now, here is where things get really interesting. This proposal is about a reverse stock split. Basically, they want the authority to reduce the number of outstanding shares by a ratio of up to 1 for -10. The primary reason stated is to meet the minimum bid price and other requirements for listing on the Nasdaq stock market, for those unfamiliar. A reverse stock split happens when a company consolidates its existing shares into fewer, proportionally more valuable shares. This is often done by companies whose stock price has fallen too low, and they want to appear more attractive to major stock exchanges like Nasdaq or to institutional investors. The voting results here show strong support with 8.5 million votes in favor, but also a significant number against with over 2 million votes against this proposal. This tells us there is some division among shareholders about this strategy. Finally, shareholders ratified an amendment to the company's bylaws. This changes the rules about how many shareholders need to be present in person or by proxy for a meeting to be valid. The requirement has been reduced to 1/3 of the shares entitled to vote. Previously, the requirement was likely higher. Why would they do this? It can make it easier to hold meetings and get business done, especially if shareholder turnout is typically low. This passed with a solid majority, 7.4 million votes in favor. So what does this all tell us about Phoenix Motor Incorporated? The company is clearly positioning itself for a potential relisting on a major exchange. And the reverse stock split is a key part of that strategy. The strong approval for director elections and auditor ratification shows a baseline level of shareholder confidence in the current operations. However, the significant opposition to the reverse stock split suggests there are some shareholders who are either skeptical about this particular tactic or concerned about what it might imply about the company's current stock valuation. This move to Nasdaq is a double-edged sword. On one hand, it can bring increased visibility, liquidity, and access to capital. On the other hand, the scrutiny on major exchanges is much higher. If the company cannot meet the ongoing listing requirements after the reverse split, they could face delisting again, which would be a major blow. The business itself, Phoenix Motor Incorporated, focuses on electric vehicles, which is a growth industry but also a very competitive one. They are essentially betting that by tidying up their share structure, they can attract more mainstream investors and potentially fuel future growth. The reduction in the quorum requirement is a practical but also notable operational change. It suggests the company wants to ensure meetings can proceed efficiently. This could be a sign of anticipated future growth where more shareholder engagement is expected, or simply a step to streamline governance. In conclusion, Phoenix Motor Incorporated is making a deliberate push towards a more prominent stock market presence. The reverse stock split, while approved, carries risk and indicates differing shareholder views on its necessity and effectiveness. The company's future on Nasdaq will largely depend on its ability to demonstrate consistent financial performance and manage its growth effectively in the competitive electric vehicle space. That is our take on this filing. What do you think about Phoenix Motor Inc.'s move towards Nasdaq and the reverse stock split? Let us know your thoughts in the comments below. If this breakdown was helpful, please give us a like and subscribe for more corporate insights. And don't forget to check out our Discord community in the description for ongoing discussions. Thanks for watching, and we'll see you in the next video.